question number 4 on your depreciation chapter. See, these all questions are designed to clear your basic concept. Once the basic concepts are clear, you can very well do the complicated ones also. So try and understand why something is being debited, why something is credited, and what are the methods of applying depreciation, how do you actually calculate it. If your basics are strong, nothing can stop you from getting the question right. So let's move on to question number 4. On 1st April 2012, the written down value of machinery is 1,40,000. It has given you written down value, a clear indication that you have to apply written down value method in this question. Okay, just underline the date also. Depreciation to be charged at the rate 15% per annum on WDV. So repairs per quarter of rupees 2,500 per machine is given as contract to Raghav. Now, is this part material? You tell me whether is this part material in making a machinery or a depreciation account. Whatever are the repairs to the machinery is an direct expense and directly taken to your profit and loss account debit side. So I have nothing to do it with machinery or depreciation. This is a point which is just given to confuse you. Omit it, because repairs are nothing to do with your machinery. Once you bring the machinery till the installation expenses, that will only be taken to machinery account, and rest all expenses which help in the machinery to be kept in its current condition, like repairs, are to be directly taken to the profit and loss account. Nothing to do with machinery account or your depreciation account. So B point, on 1st July 2012, a new machinery is purchased for rupees 1,80,000 and 20,000 is paid as installation charges. Means the total cost of the machinery will be 1,80,000 plus 20,000, that is 2 lakhs, because installation charges are included in the cost of the machinery. Prepare machinery account for these 2 years. So let's start. On 1st April 2012, the balance is given. Machinery always has a debit balance. So at the debit side, 1st April to balance brought down. Okay, how much? 1,40,000. By 31st March, I have to charge depreciation on this machinery. So 2012, 2013, 31st March by depreciation. Is anything happening before 31st March? On July 1st, 2012, a new machinery is purchased. Okay, so first I should get that machinery also into my books so that I can apply depreciation on old machinery and the new machinery. So on 1st July 2012, one more machinery. So machinery account debit to bank. How much? 1,80,000. And installation charges also to be included. Say I have paid installation charges in cash. So to cash, 20,000. So now what I can say is I have an old machinery of 1,40,000 and a new machinery of 1,80,000 plus 20,000, that is 2 lakh, and I need to charge depreciation on both. So I will show you the method to calculate the depreciation. Pay attention. See, old machinery is there with me from 1st April and is there till 31st March. So full year's depreciation will be charged. On WDV it is 15%. So of 1,40,000, 15% comes up to 21,000. And of 2 lakh, now start calculating. It is here on your 1st of July. So July, August, September, October, November, December, January, February and March. My books are closing on 31st March. My accounting year, financial year is from 1st April to 31st March. Everywhere it is like that. So when the books close on 31st March, 9 months the machinery has been with me. So I will charge depreciation for 9 months on new machinery. See, on sales, we see that if it is sold on within the first half or the second half, and accordingly we will do either full or half, that is 6 by 12. But when we purchase, we go according to the months or days, whatever is suitable. So in the new machinery which is purchased, I have depreciation rate as 15%. And it has been with me for 9 months till 31st March, so 9 by 12. So the total amounts to be 22,500. My total depreciation will be 43,500. 43,500. So this is the old machinery depreciation plus the new machinery which was with me for 9 months. So I am charging a 9 months depreciation and it is 43,500 by depreciation 43,500. Okay, and it is by balance carried down will be your balance. So I need to total this side first. Old machinery plus new machinery comes to 3,40,000. Here also I will have 3,40,000 as total, and by balance carried down as on 31st March will be your balancing figure, which will be 296,500. So on 1st April 2013, it will be to balance brought down, that will be 296,500. Okay, now moving on to the next question.